Hello, I'm Ryan Grabinski, Managing Director of Investment Strategy at Strategas, Baird's investment strategy arm. I'm happy to join you this week to discuss the newest partnership between Strategas and Baird's Private Wealth Management division, the Baird Market Gauge. This piece, born from Strategas' market balance sheet, is a comprehensive one-page look at how we see the environment for U.S. stocks. We create this view by taking 16 building blocks of market conditions and evaluating whether each is favorable or unfavorable to the current environment, and netting the difference. The result is the Baird Market Gauge, a simple and timely snapshot of U.S. market conditions. With that said, let's take a look at some of the changes we made during the fourth quarter. As you can see, we upgraded corporate earnings and economic growth, and we downgraded sentiment. Corporate earnings had a very strong third quarter reporting season, with S&P originally expected to decline 21%, and when all was said and done, it actually only declined 6%. Fourth quarter earnings should continue to show signs of improvement and will likely mark the bottom of trailing 12-month growth figures. Furthermore, the pace of margin contraction slowed during the third quarter and should show signs of improvement as we move forward. Stabilizing margin is always an optimistic sign for equities overall. The second change that we made was related to economic growth. The U.S. economy contracted at a record pace during the second quarter, and the third quarter saw a significant bounce back, but the level of economic activity is still impaired. A vaccine is the pathway to a V-shaped recovery as we find a medical solution to the virus, allowing a full reopening. But as you can see from the chart here, GDP growth bounced back but is still declining on a year-over-year basis and remains in contractionary territory. The same can be said for personal consumption, which can be seen here as well. The fiscal stimulus packages that passed earlier in the year bridged the gap for the unemployed. However, the initial benefits are nearing an end, and it is now necessary to either reopen the economy fully or provide more fiscal stimulus. The last change that we made was pertaining to sentiment. 3 of the 7 sentiment indicators that we watch are currently flagging extreme territory. The 10 and 20-day averages of the daily put-call ratio, as well as one of our investor surveys. Furthermore, we'll continue to monitor flows and positioning for further evidence of excessive optimism. Overall, 9 of the 16 items categorized as favorable and the remaining 7 as unfavorable results in a gauge that improved to +2 during the fourth quarter. This is an improvement from the neutral setting that it was at the end of 3Q. As always, feel free to reach out if you have any questions. Thank you for your time, and we hope you have a great weekend.